Managing Director of Kotak Mahindra Asset Management is with us now. Nilesh, good afternoon. So, are you optimistic now post the budget?
Yes. This budget has actually, kind of created the base for the market. There were a lot of apprehension about fiscal deficit target being maintained. Like last year, this time also Finance Minister has waved the magic stick and created 3.2% fiscal deficit. I think it will go a long way in setting the base of the market.
Okay. Well, the market's already rich. It's 8,700. Do you think it has a lot of headroom left? Is 9,000 round the corner?
I think it has a lot of headroom left. Primarily, it is driven by the flow of money. On the domestic investment side, if you see, like the bank fixed deposits today give between 6 to 7% return on a one-year basis. With this fiscal deficit, there is a chance that it will go more towards 6 rather than towards 7. Yeah. On a post-tax basis, on a one-year bank FD, you will get somewhere between 4.5%. That's the kind of move which you are seeing on a day like today. So what's your 1 day's return in a good stock market is equivalent to 1 year's return in bank fixed deposit. That's pushing capital into the equity market. Second, we are also seeing some of the steps which will deepen the financial savings. Over the last 25 years, when we have gone to semi-urban areas and rural areas, a lot of people invest money into Ponzi schemes, which offer pretty high rate of return. Most mutual fund schemes have actually delivered far better return than those Ponzi schemes, and yet we don't get as much money as those Ponzi schemes are getting because they pay much more to their distributor. And many a times these Ponzi schemes were falling actually in between the line between two regulators. Now, if they can come with a law which will make this illegal, I think that flow of money will come towards financial saving, maybe bank deposits, maybe mutual funds, and again it increases the kitty. So right now I think market has a headroom based on optimism. The earning seasons have to yet start delivering, but the flow will keep the market supported, and hopefully with this budget, earning season should start moving in favor over next 2-3 quarters.
Okay. So Nilesh, as a fund manager, we have a bit of a bipolar market now. Banks are doing the heavy lifting, maybe stocks like Larsen, a couple of oil and gas supporting, but two big sectors not performing, IT and pharma. So how do you construct portfolio here?
So in the IT sector, the worry is both fundamental as well as, let's say, sentimental.
Yeah.
The sentimental worry is coming because of H-1B visa-related views. My guess is that that's priced in. But the real worry is the fundamental related, where how many of our IT companies will be able to change from their application management and IT outsourcing activity into the product development or gaming or securities or data analytics or basically new age digital style. That transition is not happening at the pace which will give confidence to market to go and buy these IT stocks. From a valuation point of view, a lot of them are quite cheap. My guess is that if we get a sense from these IT companies that they will lower their cash balance by either declaring dividend or going for acquisition into this new age space at reasonable price, that will be one trigger which will encourage investors to get into IT sector. If we ever get that sign, we will definitely be buyer of IT stocks. Or I'll have to wait and watch for the business to transit from old IT to new IT. Whenever we get that confidence, we will be buyer of IT stocks.